Well, g'day all, Peter Clark here and welcome to this month's market update. And let's start off this month with a little recap of last month. Now, if you're interested in hearing more of our views on timing and when you should make the jump into the market or out of a property based on the current market conditions, which let's face it, currently may be complicated by inflation and rising interest rates, then go back and have a look at our last month's market update. In summary though, we came to the conclusion that the average hold time for a property, particularly in regional areas, is quite high. For this purpose, and for the purpose of the exercise, we're looking at the Baw Baw Shire, where average hold time is approximately 9 years. Now, whilst there are exceptions to every rule, if we looked at the time split on any property in any region on a 9-year scale, then the appreciation of that asset value is incredible. We also said that given that time doesn't stand still, and historically speaking, any dip in the market is counteracted by significant growth, now is always the best time. So we thought this month we'd build on the Baw Baw examples on how the property market has changed by providing you some actual examples of properties that have sold multiple times across the years and their changes in value. You see a property in Munro Street in Warragul sold on June 22 for $730,000, a $420,000 increase from the last time it sold in February of 06. A unit in Wolf Street in Druin sold in February for $410,000, doubling its original sale value of $205,000 back in 2014. And a home in Victoria Street just recently sold for $910,000, a whopping $750,000 increase on its sale in 2008. Now that's just 3 examples, and they're not out of the box. You see, they're the norm. They've all been through the challenging economic times, global financial crisis, you name it. The biggest test is the test of time, and these properties all passed. But here's the big secret. Yours is no different. You see, with the success of recent years in real estate, many have forgotten that property can ebb and flow. Yes, property prices sometimes go down, but don't panic. Don't let the propaganda and fear-mongering headlines grip you. The one trend that has never failed to deliver is that despite the fluctuations, property and real estate over time does grow. And possibly, we've been living in a little bit of a bubble for the past few years, forgetting the wise words of our mothers and fathers and theirs before them. Real estate and property, it's a long-term investment. We've been spoiled by recent markets and somehow making us believe that making fast cash in property is the norm. It's not. Historically, why real estate and property has been the preferred investment of so many is its steady reliability. Gradual increases with the occasional booms and dips, but in the long run, steady, reliable investing. Okay, now like any clickbait headline, it's important to dig a little deeper and into the facts, and we've tried to save you some time on this. In short, the fact is property values have decreased in recent months, but there is much more to it. Now, CoreLogic released its July Home Value Index at the start of the month, which showed us that Melbourne is down by 1.3% and regional Victoria as a whole fell by 0.7%. Importantly though, they highlight the 12-month rolling average for regional properties, and it shows us a 12.7% increase. So this further highlights the points that we made earlier and also last month about the average hold period of a property and taking the macro lens rather than a micro one when it comes to looking at property. Here are just a few of the attention-seeking headlines we've read in recent weeks. The Australian property prices tumble at the fastest rate since the GFC, or fears Australian housing market to plummet. And then there was one that said, from boom to gloom and depressing detail in housing price fall. You see, we're not disputing that property prices have dropped. The data supports this. But these headlines are not telling the full story and have a micro focus. If this was an annual report on property prices, it would tell a much different story. And over the past 14 years, since our last fastest tumble, we have rarely seen headlines such as regional property prices or owners double their wealth, or maybe Baw Baw property prices up 70% over 5 years, and I certainly haven't seen landlords strike gold as yields rise by 25% over the past 5 years. You see, so perhaps the biggest question here is why so much talk and speculation about the minor downturn when we've seen so little sensationalist headlines in more than a decade of growth? It'll come as no surprise, negative press sells, and as Australians we have a bit of a habit of headlining the negatives whilst downplaying the positives. So this doesn't mean that the news is always positive or that there is always a good spin to put on things. Take our current economic outlook, for example. Interest rates did rise again this month by another 50 basis points, taking the cash rate to 1.85%. Now, whilst these rates are still considered low, it's concerning that this is the first time since 1990 that they've been increased in 4 consecutive months. These rises add another approximately $140 per month of expenses on top of an average $500,000 mortgage. And with the rate of inflation at 6.1% to the end of July as reported by the Australian Bureau of Statistics, there is concern from homeowners on how already tight household budgets will cope. Now, the wage price index was also released, showing a rise of 2.7%, which is just not keeping up with the increased expenses, and to make matters more challenging, the temporary fuel excise cuts come to an end in September. So, if you were thinking of having a beer and sticking your head in the sand, sadly, the sand is the only bit where taxes haven't yet changed, as the amber ale excise has also gone up by 4%. Now to some more positive news across the market. The Albanese government announced thousands of new places for the Home Guarantee Scheme. The program has been expanded with 35,000 new places to support first home buyers to purchase a home, with as little as 5% deposit, as well as 5,000 places to assist single parents with dependents to purchase a home with as little as 2% deposit. So crew, thank you so much for tuning in again. I hope the new financial year has started well for you. And like always, if you've got any questions about the property market in general, please do not hesitate to reach out and talk to any of our property experts. Until next time, we'll see you again soon.